All right. Hey, everyone. Welcome back. So today we're going to be digging into something that I think you're going to find really fascinating.
Yeah.
A lot of people have been asking about the impact of those U.S. sanctions against Russia.
Right.
How they're playing out, what are the long-term consequences?
Mm-hmm.
And let's just say things have gotten a lot more complicated than I think anybody really expected.
Definitely a lot of unintended consequences.
Yeah. And we're talking potential blowback on the U.S. economy.
Exactly. And that's what this Asia Times article we're looking at. It's called How the U.S. Sanctioned Itself in Ukraine.
Okay. So
and it lays it all out.
This is a deep dive into this article.
Yes.
Okay, so let's unpack this.
Yeah.
So one of the first things that happened was a surge in U.S. Treasury yields.
Right.
And, that sounds kind of technical.
It does sound technical.
But it actually affects all of us.
Yeah.
Because it's hitting us where it hurts.
Yeah.
Right? Our wallets.
Yeah, in our pocketbooks, for sure.
We're talking wobbly stock prices, a super strong dollar, and even that dream of buying a house.
Mm.
It's getting pricier.
Yeah, because those rising Treasury yields basically just translate into higher interest rates on everything.
Okay.
So that mortgage you were looking at, it just got a whole lot more expensive.
Oh, great.
Same with car loans, business loans, you name it.
Yeah, that's not good.
Not good.
And here's where things get really interesting.
Go.
The article drops this bombshell.
All right.
Okay, foreign central banks are getting skittish about U.S. Treasury bonds. They're not buying them up like they used to.
They're not.
And that's a big deal because, Econ 101, when demand goes down, prices go up.
Exactly.
In this case, the price is the yield that the U.S. government has to pay to borrow money.
That's right.
So wait a minute. U.S. Treasury bonds have always been seen as this safe bet.
Mm-hmm.
Right? Why are these central banks suddenly like, nah, I don't know about that?
Well, think back to 2022. Remember when the U.S. froze Russia's foreign exchange reserves?
Yeah.
That move really just kind of sent shockwaves through the entire global financial system.
Okay.
Other countries were like, whoa, if they can do that to Russia, what about us?
We could be next.
Yeah, exactly.
So they're diversifying, moving their money away from the dollar to protect themselves.
Yeah, that's exactly right.
It's like they don't really trust the U.S. as much as they used to.
They've lost a little bit of faith.
Yeah, and the article estimates that this shift away from U.S. Treasury bonds has already pushed yields up by 0.8 percentage points.
Which is significant.
It's significant, yeah. I mean, put that in perspective for us. What does that mean for the average person out there?
Well, think about your mortgage. It's like adding hundreds of dollars to your yearly payments.
Oh, man.
So it has a real impact.
That's a huge impact.
It is.
And, wasn't it different back in 2008 during the financial crisis? It seems like I remember countries like China actually bought more U.S. debt back then.
They did.
So what's different now?
Yeah. Back then, you see, the U.S. was seen as kind of a safe haven during that time of turmoil.
Right. Okay.
But this time around, it's the opposite, right? Even as the U.S. needs to borrow more and more money to cover its huge deficit.
A ballooning deficit, yeah.
Exactly. Foreign central banks are like,
backing away.
Yeah, we're good. Yeah, backing away. And that's pushing yields up even further.
So this is a trend we're seeing.
It seems to be a trend.
It's not just like a one-off thing.
Yeah, not a blip. Yeah.
Okay, well, the article has a chart that really illustrates this.
It does. It's a great chart.
And you don't even have to be, an economist or anything to understand it.
No, it's very clear.
It basically just shows this clear correlation between fewer foreign countries buying U.S. bonds and the rising cost of borrowing for the U.S. government.
Right. And to kind of see where this might be going, we should look at another chart that they have in the article that really shows how the amount of U.S. debt that's held by foreign central banks can actually be used to kind of predict what U.S. borrowing costs are going to look like in the future.
Oh, wow. Okay.
Yeah.
So this is not a good thing.
This is not a good thing.
And this is where we start to see how those sanctions might be backfiring on the U.S.
Yeah, I think that's a good way to put it.
Okay. So the actions taken against Russia might have inadvertently undermined
yeah.
the whole credibility of the U.S. dollar and the U.S. Treasury market.
The whole system.
Okay. And there's another detail that I found really intriguing in the article.
Okay.
For years, the price of gold and real yields on U.S. Treasuries, they kind of moved in sync with each other.
Yeah, they did.
But lately, they've been going in opposite directions.
Yeah, what's up with that?
Yeah. So what's going on there?
Well, I think it all comes down to trust.
Oh, okay.
Or a lack of trust, I guess you could say. Both gold and certain types of U.S. Treasury bonds, called TPS, are seen as hedges against inflation and a weakening dollar.
Right.
But gold has a key advantage. The U.S. government can't just come in and seize it.
That's right.
So in a world where countries are kind of nervous about having their assets frozen,
What if they come after me?
exactly, gold is looking pretty good right about now.
Yeah, it's like a flight to safety, but not to the traditional safe haven.
Right, a different kind of safe haven.
This is fascinating to me.
It is interesting.
Okay, so it seems like the U.S. might have inadvertently shot itself in the foot, so to speak.
Yeah.
It's like kind of a self-inflicted wound.
You're making it harder and more expensive for the government to borrow money.
Yeah, precisely.
And that's not a good thing.
No. Yeah, so, big question. What happens if this trend continues?
Yeah, what if countries just keep moving away from the dollar?
That is the question.
Big question.
That is what we are going to be exploring in the next part of this deep dive.
Looking forward to.
So stick around.
Buckle up.
Okay, so before we went to, well, we didn't really go anywhere, did we?
No.
This is a podcast after all.
That's right.
But as I was saying, we were talking about the potential consequences of countries moving away from the U.S. dollar.
Right.
What does that even look like, in the real world?
Yeah.
For, everyday people like you and me.
Well, the dollar's dominance, it's not just some abstract concept. It has real-world effects on our lives.
Okay.
Like, for example, because so much global trade is done in dollars,
Right.
U.S. consumers have benefited from lower prices on imported goods. But a weaker dollar could mean the opposite of that.
So that means paying more for groceries, gas, everything.
It's definitely a possibility.
I'm already feeling the pinch at the pump as it is.
Yeah, a weaker dollar makes imports more expensive,
Okay.
which could fuel inflation.
Not a fan of that scenario.
Yeah.
Anything else we should be worried about?
Well, the U.S. also enjoys something called exorbitant privilege.
Exorbitant privilege.
Yeah, thanks to the dollar's dominance.
Okay.
Basically, the U.S. can borrow money at lower rates than other countries.
Okay.
Because everybody wants to hold dollars.
So it's like having the best credit card in the world.
Exactly. You got it.
Okay.
But if the demand for dollars drops, that privilege could disappear, and that would lead to higher borrowing costs for the U.S. government.
Oh, we've already talked about that massive U.S. deficit.
Yeah.
There's growing interest payments on the national debt.
Right, right.
Higher borrowing costs would just make that situation even worse.
It would. It's a potential recipe for,
for disaster.
Instability, yeah.
Yeah.
Higher borrowing costs lead to a larger deficit,
Right.
which further weakens the dollar, leading to even higher borrowing costs.
It's a vicious cycle.
It is. It's a spiral.
Okay, so what can the U.S. even do about this?
Well,
I mean, is there any way to reverse course? Can we just, unfreeze those Russian assets and hope everything goes back to normal?
I don't think it's that simple.
No.
Once that trust is broken, it's hard to regain it.
Right.
And other countries are already, looking into alternatives to the dollar.
Okay.
For trade and investment.
So the genie might be out of the bottle.
I think it might be.
The article did mention gold as a potential beneficiary.
Right.
We're seeing that play out with gold prices surging.
Yeah. Gold is having a moment.
But are there any currencies that could actually challenge the dollar's dominance?
Well, the Chinese yuan is often mentioned as a contender.
Okay, the yuan.
Yeah. China is a major economic power.
It is.
And they've been actively promoting the yuan's use internationally.
But let's be real for a second.
Okay.
The yuan is not nearly as widely used or as easy to trade as the dollar.
That's true. That's true.
Right.
It faces some hurdles.
Yeah.
To becoming a true global reserve currency.
Okay.
China's capital controls and just the lack of transparency. Right.
In their financial system.
Yeah, those are big obstacles.
They are.
So bottom line.
Okay.
Is the dollar doomed?
I don't know about doomed. I wouldn't go that far.
Okay.
The dollar has taken a hit, but it's still the most important currency in the world.
Okay.
But we might be entering a period of transition.
Okay.
A multipolar world.
A multipolar world.
Where other currencies play a larger role.
So not the end of the dollar, but maybe the end of its,
reign.
Reign, yeah.
Exactly.
A changing of the guard.
Yeah, you could say that.
Okay.
And this transition, it could be a little bumpy.
Oh, great.
We could see more volatility in currency markets.
Right.
More uncertainty in global trade. And just increased competition for financial power.
This sounds like things could get a little wild.
It's definitely a possibility.
Yeah, but here's another thought.
Okay.
If this shift away from the dollar keeps going, What does that mean for the U.S. in terms of global influence?
That's a great point. I mean, financial power and geopolitical power, they're pretty closely linked, right?
They are. They're very intertwined.
Yeah.
For decades, the U.S. has been able to use the dollar's dominance as a foreign policy tool.
It's like a secret weapon.
It is.
But if other countries start using alternative systems, we lose some of that leverage.
Exactly.
So we're talking about a potential reshaping of the global power structure.
We are.
All because of a decision to freeze some assets.
It's pretty remarkable when you think about it.
That's a pretty big ripple effect.
Huge ripple effect, yeah.
It definitely seems like those consequences weren't fully considered.
Perhaps not.
Okay, so we talked about the downsides for the U.S.
Right.
Could there be any silver linings to this shift?
Yeah, some people argue that a more balanced global financial system with multiple reserve currencies could actually be more stable in the long run. Less susceptible to,
to one country kind of calling all the shots. So it's like diversifying a portfolio, but on a global scale.
It is. You got it.
Spreading the risk.
Spreading the risk instead of putting all our eggs in one basket.
Okay, I like that analogy.
It's a good one.
That's a really interesting point.
Yeah.
But before we get too optimistic, I want to bring us back to that main takeaway from the article.
Okay.
The U.S. might have unintentionally harmed itself by freezing those Russian assets.
Yeah, it's a crucial lesson in strategic thinking.
Yeah.
In a complex, interconnected world like ours, actions have consequences.
Yeah.
It's vital to think long-term and consider those consequences, especially when dealing with something as complex as global finance.
Yeah, it seems like that long-term thinking might have been missing here.
That's possible.
All right, well, we've covered a lot of ground here.
We have.
But there's still so much to unpack. This whole situation has really got me thinking about who the real winners and losers are going to be as this new financial landscape starts to take shape.
Yeah, that's the big question, isn't it?
It is. And exploring those potential winners and losers is exactly what we'll be doing in the next part of this deep dive.
Looking forward to it.
So don't go anywhere. All right, welcome back. So before we got a little sidetracked, we were talking about, the potential winners and losers in this, this possible shift away from a U.S. dollar-dominated world.
Right.
It's like we're trying to look into a financial crystal ball.
Yeah.
But I'm curious, who do you think stands to gain the most if the dollar starts to slip from that top spot?
That's a tough question.
Yeah.
But it's worth thinking about countries that currently hold a lot of U.S. debt.
Okay.
Like China and Japan.
Right.
They could actually see those holdings lose value as the dollar weakens.
Okay.
But on the flip side, this could be a good opportunity for them to try to, push their own currencies on the global stage. Right.
And to diversify their reserves even more.
So it's kind of mixed bag for them.
It is, yeah.
What about emerging economies?
Yeah.
Could they come out ahead in this scenario?
I think there's a real chance they could.
Okay.
A multipolar system, where you don't just have the dollar, could give them more leverage in global trade and finance.
Right.
Imagine being less reliant on the U.S. dollar and having more options for financing development projects.
So it's like a win for their kind of economic freedom.
It could be, yeah.
Okay, interesting.
More flexibility.
Yeah, okay. But let's bring it back home for a sec.
Okay.
We've talked about how a weaker dollar could mean higher prices.
Right.
For us, the average American.
Yeah.
Hit to our purchasing power.
Just a bang for your buck.
Yeah. Are there any other potential downsides?
Well, one major concern is, what's going to happen with the U.S. government's ability to finance its debt.
Right.
Well, if the demand for U.S. Treasury bonds drops.
Borrowing costs could really skyrocket.
Okay.
And that's going to make that massive U.S. deficit we've been talking about even harder to manage.
And that could lead to some pretty tough choices.
It could, yeah.
Like cuts to social programs, higher taxes.
Possibly.
Maybe even like a full-blown debt crisis.
Yeah, it's not out of the realm of possibility.
That's a scary thought.
It's definitely a concern.
I want to circle back to gold for a minute.
Okay.
The article mentioned how gold prices, they've decoupled from U.S. Treasury yields.
They have.
And they've been surging lately.
Gold is on a roll.
So is this a sign that investors are getting nervous about those traditional safe havens?
I think it's definitely a signal that investors are looking for assets that are outside the control of governments and central banks.
Okay.
Gold has that long history as a safe haven during times of uncertainty.
Right. So it's like the ultimate insurance policy.
You could see it that way.
Okay. Against like financial meltdowns.
But it's important to remember that gold is still a volatile asset.
Oh, okay.
Its price can fluctuate a lot.
So no guarantees there.
No guarantees.
All right. Well, we've covered a lot of ground today.
We have.
Sanctions, reserve currencies, the rise of gold, this potential multipolar financial world.
Yeah.
What's the one key takeaway you think our listeners should remember?
Well, I think the key is diversification.
Diversification.
Don't put all your eggs in one basket.
Right.
Consider spreading your investments across different asset classes, including things that are less dependent on the U.S. dollar.
Smart advice.
Thank you.
So stocks, bonds, real estate, precious metals, maybe even a little crypto.
Sure.
A diversified portfolio for a multipolar world.
That's the idea.
I like it.
Yeah.
Okay, well, this deep dive has really given us a lot to think about.
It has.
From the potential consequences of those U.S. sanctions to the rise of alternative currencies, it seems like the world of global finance is, it's anything but static.
It's constantly changing.
It's going to be fascinating to see how this all plays out.
It will be. This discussion has just scratched the surface of this complex issue.
Well, hopefully it sparks some curiosity.
Yeah.
Encourage our listeners to keep exploring these topics.
Absolutely. Stay informed.
Absolutely. The world of finance is always in motion, always evolving.
It is.
And as informed global citizens, it's up to all of us to stay engaged, stay curious, and keep learning.
Couldn't agree more.
Until next time, thanks for taking this deep dive with us.